to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special, and so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now they've been testing. And you take it up, and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You can just blow them up, and they get a nice big size for about less than half the weight probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high. And you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
this is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you, spacecraft operator, make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all of the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. Because of the vagaries of international law, if something happens in space, well, boy, you can sue the state that launched your spacecraft, you can sue the company that brought you there, you can sue the hotel, you can sue the individual, you can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. When it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. do 395 upright, it helps to have a guide. And mine is a man named Jan. And his crew.
It's a mess back here.
Heron.
Let's tidy up first.
And Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Swerstra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah. Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over.
Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. I'd be like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
as a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and yeah, no problem. We just wanted to get through.
It was a beautiful choice.
Glad we got out of the smoke.
Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky,
Look at it.
strip malls of the Central Valley.
We have made it sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. So we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley, or like throughout the U.S., or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019.
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, and how
Connection
much
lost.
Each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LEQ.
Can I take her out for a spin?
Please.
LEQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. a large room-sized computer. But now, this artificial intelligence stuff is amazing. LQ?
Yes,
Schedule a doctor's appointment.
no problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the U.S.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence, robots, will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. One, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, if I post a video when there's no ads being spent, like January and February, that's a reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year, because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good.
You in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games, it's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. It is Wednesday, Hump Day, April 19th, 2023. Carol Masser. It would be nice if I could get my own name right. I'll have to work on that one.
Middle of the week,
And that's the wonderful Madison Mills of Bloomberg Quick Take. She is correspondent there. We're live in our Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Quick Take, Bloomberg Originals. Hey, Maddie, good to have you back. We missed you. I know you were fighting some stuff here. It feels like lots of stuff going around. The other thing that seems to be going around as of late is tight trading ranges on Wall Street.
Yep, I have in your notes here, Carol, 2-year above 4.2%. Investors continuing to track and assess
another round of earnings, but not a lot of conviction today.
No, absolutely. And I do feel like we're topping out at that 4.2% rate. We got some Fed minutes. We're going to dig into it with our TV colleagues in our cross-platform in just a moment. But on the earnings, what you need to know about Netflix, the stock is lower. And then we do have the latest on the bank earnings, deposits, all the interesting metrics, both big and when it comes to the regionals.
And then, of course, we've got Tesla earnings this afternoon at the close. Another round of price cuts.
Yeah, everybody's going to be focused on margins. Like, what does it do as, you know, what we're, I think, on our third price cut. Great deals for, I guess, consumers, but not necessarily for investors when you think about valuation. We've got IBM, Zion's, Lam Research after the close, and then a sign of our times, Maddie, the repo man, he or her is back.
I love this story. I love this story so much. I can't wait for it. And we've also got...
There's actually a convention for repo people.
I can't wait to find out, like, what is it like as a reporter to find out, guess where you're getting sent? The repo convention?
I love this story. I'm curious what put it on. Joel Weber, the editor of Bloomberg Businessweek, his radar, so we'll find out. Hey, also it seems like a sign of our times and maybe back is recycling. I thought we had this figured out. If Jason Kelly was listening, he would know what I would mean by that. We're going to get into how to be better stewards of our earth with the CEO of the Recycling Partnership. Got to get to the markets, a mixed trade, tight range. Right now over to Scarlett and Romaine because countdown to the close, our cross-platform coverage, it starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left here in the trading session. Romaine Bostic joined right now by Scarlett Fu as well as our colleagues Carol Masser and Madison Mills. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and those folks streaming on YouTube. Another relatively tepid day here in the markets, Carol, at least on an aggregate basis here. I don't know if you're watching crypto again. I don't know if you're watching, well, wait, let me guess, Chinese stocks.
What are you saying? You don't like my choices?
Well,
no, I actually do check in on it because we've been getting some economic data. I know you're. I think crypto. We saw Bitcoin go back below 30,000 again.
Yeah. Did you see though? I mean, I was looking at sort of like the big movers today because you're sort of looking at sort of what sort of leads this market, and I did see a lot of those kind of med tech companies were out front here on the day. Obviously, not enough to lift the broader market, but it was a pretty impressive rally.
That was a gift to me. Oh my gosh, you just warmed my heart.
Happy birthday.
I am looking at the medical equipment devices. Let's bring it up for everybody who's watching on TV, YouTube, and Bloomberg Originals. For radio, we're seeing the medical device area go higher, and thanks to Intuitive Surgical, which came out there, the market leader, you know, in the robotic surgery. We're talking about the Da Vinci procedures. They saw an uptick when it comes to procedures, which is good news for them. Procedure growth topped Wall Street expectations. So if you look at kind of the broader market, the iShares U.S. Medical Devices ETF, it's up almost 3%. Intuitive Surgical, though, check it out, really standout performer, up almost 12%. But other players in the space, Abbott's up almost 8%, and Stryker, Maddie, you can see up almost 3%.
Well, I also want to take a look at tech as we prep for the earnings from the likes of Tesla and IBM today. We've all been wondering whether earnings would support the recent tech rally. Take a look at the tech sector over the past decade, and you can see that tech outperforming the market, and that dislocation really started to kick off at the start of 2020, remaining strong even as they got a little bit closer in 2022. And Gina Martin Adams put it really well this morning, saying tech stocks have tripled the returns of the equity market so far this year alone. So will we see earnings continue to support that dislocation?
All right, well, we go back to the broader markets, and I think right now, well, I'm going to sound like a broken record, but it has been a little bit of a holding pattern, another tight trading range here on the day. In fact, one of the tightest trading ranges that we've seen going back to Thanksgiving, the day after Thanksgiving of last year here, basically unchanged on the S&P 500. The NASDAQ only higher by about 0.1%, and the Dow only lower by about 0.3%. The Russell 2000, as well as some of the cyclical names, are getting a little bit of a stronger bid. The Russell, though, as a whole, up about 0.3%.
And you look at the sector performances as well, and none of the sectors are moving by more than 0.7%. REITs, again, one of the big movers, this time to the upside in the S&P 500. Utilities and consumer discretionary are the best performers, but within consumer discretionary, it's not car makers. It's mainly Amazon, Tapestry, and Chipotle. On the downside, you've got energy and communication services, namely Netflix, and materials.
All right, we talk about, well, Netflix here. Not quite the reaction that some people had thought here. The earnings weren't bad, but not necessarily good enough to continue to bid up the valuation. $320 right now is where Netflix sits. That's about down 4% from where it closed yesterday here. An interesting wording came out of CDW, which actually gave an interesting outlook here when it comes to IT spending and spending on electronics and computer services. Those shares down about 13% and really dragging everything else down in that space down as well. Extreme Networks down about 20% here on the day. A lot of concerns here that overall the IT market is in decline. That is at least what CDW is telegraphing, saying they only expect growth in the high single digits for the industry overall. United Airlines, one of the bright spots here on the day, up almost 7% here. And I want to bring your attention to two companies, of course, struggling to fight to live for another day. Bed Bath & Beyond shares have been all over the place. It is a penny stock, to be sure, up about 30% right now here, even though they're basically laying the groundwork for another bankruptcy, for a bankruptcy filing, I should say here. But some folks think this may actually work out to their favor. And I don't have it on the board there, but just over the last few minutes, a huge spike in Virgin Orbit. Those shares doubled in the span of about 5 minutes here on the back that they may actually be in some talks for a little bit of a lifeline here. Of course, the big earnings after the bell will be Tesla. And, well, overall, analysts remain pretty bullish on the stock right now. In fact, more right now rating that stock a buy than they did just a few quarters ago. Expectations are that, well, margins might be hurt just a little bit, but not nearly as much as maybe Tesla's competitors.
All right, you mentioned Tesla, you do mention Virgin Orbit. I just want to go there real quickly, up 68% here. Mind you, it's not even a buck stock here, and those headlines coming from, looks like an interview in the Washington Post, so we'll keep an eye on that one and see whether or not they've got kind of a lifetime, whether it means a lifeline, I should say, in terms of other buyers. Having said that, one of the things that we've been focusing on, of course, this week, and will continue to, is everybody in the bank sector, and Morgan Stanley reported earlier today, and the company's CEO, forgive me, James Gorman. Totally like spacing a little bit. Yeah. James Gorman, of course, really commenting on the environment and Fed policy, but he also did talk about the market environment. And you talked about that tight range, but maybe that could be about to change. Here's what he had to say.
I expect the markets to remain choppy through this earnings season and for the next several months. However, absent any geopolitical surprise or limited progress on bringing down inflation, I think 2023 is likely to end on a constructive note in most areas.
All right, so we will see. James Gorman, of course, the CEO over at Morgan Stanley, he does expect maybe 1 or 2 more rate increases from the Federal Reserve. But I think it's safe to say, Scarlett, at this point, because of the tight range in the market, we're just not quite sure what comes next, and everybody's kind of waiting for a clearer picture.
Absolutely, and there's a lot of division over whether we're going to get those rate cuts or whether those rate cuts might be pushed off to next year at some point. I want to go back to what Maddie was saying about Tesla and how it's a big driver for the tech group. Certainly it is, if you look at its profit margins, but it's actually a member of consumer discretionary, which I find really interesting because it makes up 15% of that group, and it doesn't trade as a consumer discretionary company. It trades as a tech company. So when we look at what it's doing with its price cuts and how much of a profit margin it has, it's not your typical company. It has a pricing power that's different from all the other consumer companies.
Yeah, it's so true, Scar. There's always the debate of whether Tesla actually classifies as a tech company, but sticking with consumer, which you bring up, I found it really interesting even looking at L'Oreal's reporting today that consumer spending has remained so strong, and we know that has been the case specifically in the cosmetics industries, that consumers are continuing to spend on makeup as we return to the office and things like that, but it begs the question of whether or not consumer resilience is going to continue in spite of these macro headwinds that we talk about so much, and what that means for the Fed moving forward.
It'll be interesting. I'm obviously buying makeup and buying cars a little bit different here. We'll split the difference and find something in between. I don't know how much Tesla is going to tell us, right? Because we know that the way that this stock is priced, at least what investors are looking for, is much more long-term and to a certain extent well outside the U.S. here. I agree with you about L'Oreal. There's a certain pocket of the consumer economy that is probably going to hold up here. But then what happens when we get to those other names in about 2 or 3 weeks, and how they hold up, those apparel makers and some of the departments?
Yeah, I think we have to remember, even though we're getting some really big names that are reporting, we're very early in on the season, and we're going to get a lot more checks, if you will, on the overall economy.
And don't forget, we get IBM tonight, too, so you get a read on business spending,
And watch the chip space, because Lam Research, too, and we've been getting a lot more news in that regard. All right, guys, we're going to be back in less than an hour's time. Our cross-platform coverage on radio, TV, YouTube, and Bloomberg Originals. We will count you down to the closing bell and break those Tesla earnings. That's coming up at 4 p.m. Wall Street time. I knew that ultimately I wanted to get to Geeta Ranganathan, who follows this name so closely and picks it apart, goes through the details, and really explains the story. She is Bloomberg Intelligence technology and media analyst. As I said, Geeta Ranganathan. She is with us on Zoom from our Princeton, New Jersey bureau. Hey, Geeta, stocks a little bit lower today, but if you looked at the aftermarket last night, it was getting killed. Netflix, like down 10, 11%, now down about 4% or so. Initial stock reaction, what were they reacting to? And then maybe why did investors maybe rethink it a little bit?
Yeah, thank you so much, Carol and Madison, for having me. So obviously the knee-jerk reaction, as always, has been to the subscriber numbers, right? And so the 1Q subscriber numbers came in a little bit lighter. The 2Q revenue guidance wasn't looking too great either. And, you know, that was kind of what prompted that initial sell-off in the stock. I think as investors kind of had time to, you know, go back a little bit into the report and digest some of the other details. Remember, Netflix itself is pivoting away from, you know, just being a subscriber story to becoming more of a profitability story, becoming more of a free cash flow story. And I think they did absolutely spectacularly on that front. You know, if you look at the operating margins, they came in well above what they had projected. If you look at our operating profits, again, they came in very well. And where they really kind of stunned you know, the street was with their free cash flow number. So over $2 billion just in first quarter free cash flow. They upped their guidance for the full year to $3.5 billion, and we think that that still is pretty conservative. It could well go to maybe about $4 billion just a free cash flow.
I heard you on surveillance this morning, so I got to cheat a little bit in terms of your thinking, but that's amazing, right, for a media company essentially?
That is absolutely amazing for media, for streaming, and especially for Netflix. Remember, this was a company that was getting criticized left, right, and center for not, not generating cash, for losing, for burning $3.5 billion in cash, maybe just about 4 years ago. And how they've turned the story around has just been, miraculous. And of course, it gives, I think, the whole of the media landscape now a playbook, right? This is what everybody wants to do. This is what everybody is aspiring to do. Get to those 20% operating margins, not only break even on their streaming business, but then really get out to churning profits and churning free cash. Remember, everybody right now is losing money in the streaming business. Whether it's Disney, they're going to lose about $3 billion this year. Whether it's Paramount, again, $2 billion in losses. Peacock, $3 billion in losses. So the fact that Netflix is going to throw out $7 billion in EBITDA and $3.5 billion in free cash flow is just marvelous.
You know, media companies have always been funny. If you go back to kind of the likes of traditional cable companies, and we always talked about them not being necessarily huge money maker. Like, how do we think about streaming? Should they be making money, Geeta, in this environment, or should they be, as a class, be making money?
I mean, that is such an excellent question, right? I think after that initial dust settled from that streaming land grab phase and everybody was just kind of in that rush to get streaming subscribers, I think then this question kind of really started to evolve, being, what is the end game? What are the unit economics in this business? Is it ever going to be as good as the old TV model where we saw networks, linear TV networks like a USA or a CNBC generate, 30, 35% margins quarter after quarter? And so what we've kind of now, obviously with, companies spending hand over fist when it came to content, there was this question about whether they're ever going to be able to break even. I think Netflix finally has provided the industry with some sort of a template of how to go about it. I mean, obviously they did have a lot of bumps down the road, especially in their early innings. But I think now that, they're in a slightly more mature phase, I think we do have this kind of playbook.
So that's my exact question for you. In terms of the cash flow, what do you anticipate Netflix pouring that cash into to increase profits even more? Are they going to lean into more content creation for those programs that are really cheap to produce?
That's a fabulous question. I think what they said last night is, yes, they're holding so they are curbing their content spending a little bit this year, especially, and also for 2024, they kind of gave some guidance there. But I think after that, kind of everything becomes, fair game. So they talked not just about, necessarily TV shows or film content. They're going to expand into different categories. They're going to expand into gaming. They already are, in fact. They might look at different genres, whether it's sports programming, and all of that is going to take a lot of money. So yes, they're definitely going to invest in more content, in more programming. Yeah. But they also talked about return of capital. So they're They already bought back about 400 million of shares in the first quarter, and they're going to accelerate their whole share repurchase program. So this is becoming very much like a traditional, low growth tech company, really.
Well, real quick on that, because you mentioned sports, and I feel like the live stream of the Love is Blind reunion was a good test run for them when it comes to live programming. Is it a big deal that that didn't go well?
And they addressed that yesterday a little bit. So they did talk about, some technical bugs. It obviously is important for them to have all the infrastructure in place before they embark on something as ambitious as sports programming. I think they'll get there. I mean, obviously there are going to be some kinks, some hiccups on the way. I don't think it's as big of a deal. They did finally get the show up and running, and they're going to learn along the way. So eventually they will have all the infrastructure in place.
Isn't it funny though, Geeta, that you feel like the streaming services, all this highly produced content, you can watch it at any time, doesn't matter when you watch it, is now kind of going back to the linear model of destination viewing or specific times, whether it's through sports or something like a live feed.
Yeah, I mean, that's kind of interesting. And I think what Netflix is really trying to do here, I think, is just kind of build anticipation, create buzz. I mean, if you look at reality series and something like, Love is Blind or, I don't know, Nailed It or all those baking competitions, I mean, that's something that you typically have on in the background as you're folding laundry or kind of, unloading your dishwasher. But I think they want to just create the buzz, create anticipation so that you have this audience kind of coming in to watch it almost like appointment television. So it's really just more ways for them to, have a captive audience, which eventually, hopefully, they can sell to advertisers at some point.
On that exact note, advertisers, they were going to roll out this ad-supported model. What is the plan for that? Because I have not seen that yet.
So the ad-supported model is up and running. They did not give us necessarily any subscriber numbers around that, but they did give us some directional data points. So what they did say is that it is going according to plan. They probably, by our estimates, they probably have about 2.5 million subscribers on that ad plan. There's still a lot more market to capture. But I think the really interesting point that they gave us is even though the plan is priced at $7, they are actually making $16 per subscriber because they're able to attract all those advertising dollars. So essentially, they're agnostic between an ad-supported consumer or an ad-free consumer, because remember the standard Netflix ad-free plan costs about $15.50.
So the ad-supported tier and the cracking down on password sharing, that's catalysts for the stock to move to the upside ultimately when they get it all in place. And I'm just worried.
Definitely.
And should we be concerned about the delays here and kind of rolling this out, or nah?
Not really. I look at it in the scheme of things. I mean, it's probably a few months out, and they need to execute well, and it was essential for them to kind of roll it out in a few test markets, get those learnings, and then kind of implement it. It was really interesting that they first rolled it out in Canada, and they pretty much look at Canada as kind of this proxy for the US. So they've got all their learnings from Canada. They know how exactly the audience reacted, the users reacted. They kind of know what to expect now when they do a much broader rollout in the US, which is by far their biggest market, and where they need to execute really flawlessly.
Hey, one last question. Netflix has been telling investors, stop fixating on my subscriber model. Take a look at sales and profit. Are they right to do so in your view?
I think so. I think investors and Wall Street has to pick a lane, right? If you wanted, all along it was the subscriber story. Then last year you had the great Netflix meltdown, the great Netflix correction, and they said, okay, subscriber growth has hit a wall. Start focusing on our profitability metrics, and investors rightly started focusing on profitability metrics. Nobody is chasing subscribers anymore, and so now when they are reporting, good profits and good free cash flow, we got to give them credit.
This is why we want to talk to you, Geeta Ranganathan. She's technology and media analyst at Bloomberg Intelligence, knowing all when it comes to Netflix, joining us from our Princeton, New Jersey bureau. Geeta, thank you. Shares of Netflix, by the way, down about 3.8%, but setting us up for Disney, for Amazon, everybody else to report. In the meantime, we do want to mention a headline crossing. The Bloomberg, we were expecting this as the U.S. Supreme Court extending a temporary hold on new restrictions imposed by a federal judge on a widely used abortion pill. So that's giving the justices now until Friday to decide to handle the case. So we've got a couple more days again.
Yeah, and this order was from Justice Alito, who handles emergency requests from the Fifth Circuit, which is where this is coming from. And this follows, as we know, the request from the Biden administration and Danco Laboratories to put these restrictions on hold to continue to take a look at those restrictions moving forward, Carol.
So the clock ticks now until Friday, April 21st, and many would say that this is headed all the way to the Supreme Court. But it's tricky. There's a bunch of judges involved and very different opinions about what to be done. All right, we'll continue to track that, as you know, as well as the market trade. Carol Masser, along with Maddie Mills. You are listening and watching Bloomberg Business Week. This is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, S&P, NASDAQ, they are both higher right now. Stocks, however, wavering amid earnings reports. We've got the S&P up 2 points, little changed, up by about 0.1%. The Dow down 86, drop there of 0.3%. NASDAQ up 23, a gain of 0.2%. 10-year yield right now 3.60% with a 2-year that's yielding 4.26%. Spot gold down $9 the ounce to $19.96, drop there of 0.5%. And West Texas Intermediate crude oil tumbling 2.1%, $79.15 a barrel. The NASDAQ 100 index up now by 0.1%. Year to date, that index up 19.8%. But is the tech trade losing power? Margie Patel is Senior Portfolio Manager at Allspring Global Investments.
People thought we'd start to see very disappointing earnings. And although we're very early in the earnings season, so far companies have once again surprised on the upside. Most earnings have been a little bit better than people would have thought. They haven't really shaded their outlook for the whole year. So someone who is expecting to see a big reaction from the Fed's raising rates last year, we just really haven't seen it yet, although we're quite early in the earnings season.
And speaking of earnings, specifically banks, we've got Morgan Stanley up 0.6%. Look at Western Alliance Bancorp. That stock surging today by 23.9%. And First Republic up by 13.2%. After the bell, Tesla will be all over that when that breaks. Tesla shares as they cut prices down 0.5%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Wednesday. Another round of bank earnings. Morgan Stanley, the investment bank there, and its giant wealth unit surpassing analyst expectations in the first quarter, even as profits fell from a year earlier, dragged down by a drop-off in deal-making and a jump in loan loss provisions. You had U.S. Bancorp, the largest regional bank by assets, also reporting. You had Western Alliance after the close. We got to get to it. What feels like our daily banking roundup. Bloomberg Intelligence senior analyst for U.S. regional banks, Herman Chan, in the house, along with Bloomberg Intelligence senior global banks analyst Allison Williams in our Bloomberg Interactive Broker studio. All right, Allison, I want to start with you because it was like really the last big one, if you will, certainly here in the U.S. Morgan Stanley. How'd they do?
So they did fine. I would say sort of steady as she goes.
Is that like a fine when you're fighting? Like, I'm fine? Honey, I'm fine?
I would actually say solid quarter. So I would characterize it as solid. They did disappoint on net interest income, but it's a lesser story for them. And really the big surprise out of all the banks was JP Morgan had that huge net interest income number. To put it into context.
Do we always compare against JP Morgan?
Sometimes everybody has their moment, but certainly JP Morgan is having a really strong moment this quarter. And it is a quarter where, despite all the regional bank concerns, lending is really where the banks are making money. I mean, the net interest income growth is substantial.
Finally.
Yes. And so banks like Goldman Sachs and Morgan Stanley are really where we saw the weakness. Equity trading was weak. That's Morgan Stanley's big business. Most banks missed. Fixed income trading was better.
Yeah.
We think that continues with the volatility. Banking fees, down 20 to 25%. That sounds bad, but they were down by half last year. Still waiting for activity to pick up there. And then for Morgan Stanley, the wealth unit coming in a little bit better. So really the big things for them, the wealth unit is their core business coming in a little bit better. Net interest income, I think the outlook going forward is really just we're going to continue to see deposits coming out of the non-interest bearing bucket free to banks, and those costs are going up. And Herman can talk a little bit more about what he's seeing at his banks.
Yeah. So overall, we've had continually said over the past few weeks that the industry's having a very stable recovery process. You see that through the industry data with the lending from the Federal Reserve, the emergency lending issues. Those haven't really materialized as much as originally feared. And then with earnings season now, with a bunch of companies reporting, everything seems fairly stable. You're seeing at the margin some higher deposit costs and deposits flowing out, which is to be expected with interest rates where they are today. And overall, things look pretty rosy.
So U.S. Bancorp, the largest regional by assets.
Right.
How'd they do?
They did fine. Their top line guidance for 2023 was only marginally down versus what they expected in the fourth quarter, which is another sign of stability. So everybody is showing that sense of stability on the margins. Things are not that much worse than they were a quarter ago. So everything looks good.
So what is the question to ask on regional banks to suss out how real this rosy picture is?
Right. So it's going to be what they expect going forward in terms of deposits and how can they continue to stabilize their deposit franchise. Are they going to see some continued bleed outs? On the margins, a bank like Citizens, which reported today, had a bit more deposit outflow versus a bank like PNC. So there's some subtle differences here and there, but overall things look fairly stable.
Right. We had a Western Alliance last night that just took off like a rocket. Right?
Exactly.
And we were worried about them.
We were worried about them. They had already pre-announced that they were showing us 11% drop in their deposits in the first quarter.
Right.
But the positive thing was that the $2 billion of deposits came back thus far through April 14th. So another sign that things are coming back. And they had some really strong positive commentary on the call earlier today in terms of deposits coming back, even some tech deposits coming back. So all of that is a very good sign.
So, okay, are there any other focal points for you now, Allison, at this point?
I would just add to Herman's comments that from the big banks that gained some, they all said it was a very brief period of time. It was from a few failed banks
kind of thing,
that they sort of gained, and then it's stabilized. Okay. And so, I mean, it was almost a little too consistent, their message, but I think they are giving the message, and we know that sentiment is very important. The negative sentiment was what led to some of the turmoil, and again, like we would call it turmoil, and I think that is what we're hearing from the banks. It was a couple of weeks of turmoil. Things are stabilizing, and now we're looking forward to, as Herman noted, sort of a normal pattern of deposit outflow and deposits. Not a crisis. Certainly not the financial crisis. Really much different.
Right. Modest deposit outflow, not deposit flight.
And not a credit crunch even?
And not a credit crunch. From, the big banks are all saying, there'll be pockets where there's some pullback. Office, commercial real estate, that's another thing that people are super focused on. It's going to be a really long-term story. The one number I'll give you is Bank of America. They had 15 million of net charge-offs. So net charge-offs are sort of a loss on a portfolio that's almost $19 billion. So 19 billion, 15 million, you can see where, I mean,
What clarity do
very
we
early
have?
innings, very early innings.
What clarity do we have in terms of their holdings and their exposure?
We got a lot more disclosure from the banks, at least from my banks, and Herman can talk to what he's seen, but a lot more disclosure just in terms of the makeup of those loans, the recourse that the banks have, loan-to-value ratios. The one thing that we're watching is, even though the loan-to-value ratios were 50 to 60%, I think, on a lot of these loans at origination, we have had, some pretty sharp price contraction. And so that is why we expect to see some loan workouts. People are going to have to come in, put equity into the deals. There'll be a lot of non-accruals. But in terms of loss content, we're really not seeing it, and that's going to be a long-term story.
So not yet?
Not yet, and it's not going to be, sort of the sudden unraveling that we saw, right? We're seeing very dramatic moves in the CMBS market. Yeah. So that's sort of a foretelling. But it's going to be something that is going to take a long time to play out.
Right, and the banks have ability to work out these loans and work with the borrower, whereas a CMBS, it's more black and white. If you don't pay, then you default and give the keys back. So there's a bit more flexibility with how banks underwrite and manage the credits versus a CMBS structure.
Can we just ask you about First Republic?
Sure.
That's next week.
That's right, Monday.
And I know you and I, we talked about it yesterday after the close, after Western Alliance, but how should we, as investors and our Bloomberg audience, kind of think about that name in particular, which we know has been so beaten down and also helped out a lot?
That's right. So there's a lot of unknowns as to what's the way forward. They're going to have to talk and give a clear picture of how they're going to retrench the balance sheet, because when deposits are going out the door, you have to shrink the asset side as well. So we'd expect potentially some commentary about asset sales, security sales, that sort of thing. But I would point to the fact that Western Alliance said deposits are coming back. So you've seen First Republic shares really rebound after that commentary today from Western Alliance. So people are trying to read through in terms of potentially a return of some of the deposits that really exited over the past few weeks.
Should we shift our concern when it comes to banks about the economic outlook, or no?
You know, the economic outlook is interesting. Obviously, we know there's a lot of uncertainty, but for me, you know, we had J.P. Morgan, right? So Jamie Dimon, they gave this net interest income guidance. Fed cuts are factored in because they're looking at the curve, but then they increased their reserve because they're tilting their economic outlook a little bit more negative.
Yeah.
Bank of America, same thing really with their net interest income outlook, but shifting a little bit more positive on their economic outlook. So I think that tells you that there's a lot of uncertainty. And then, by the way, Jamie Dimon was talking about the net interest income factors in Fed cuts, but everyone should be prepared to live in a world where rates are higher. So I just think that tells you there's a lot of uncertainty. That circles back to my point. We think fixed income trading is a business that continues to benefit either way because of this uncertainty and the volatility.
Right. And on the regional side, things seem to be progressing normally. We haven't seen a lot of credit charge-offs over the past few years. So as we get further and further closer to a recessionary period, that will happen.
All right, gotta run. Thank you both, Allison Williams of Bloomberg Intelligence and Herman Chan, also of Bloomberg Intelligence. So appreciated. All right, let's get to Washington and a check on world and national news. Hey, Nance.
Thanks, Carol. The Supreme Court is extending a temporary hold on new restrictions that a Texas appeal court had placed on the abortion pill mifepristone. The justices now plan to rule by Friday on how it will handle the case. The current stay was set to expire midnight tonight. In the Texas ruling, a federal judge and appeals court said the FDA did not follow the proper protocols when it approved the drug more than 20 years ago. House Speaker Kevin McCarthy is proposing a bill that would raise the U.S. debt limit for about a year and cut federal spending. McCarthy says President Biden now has a choice.
Now that we've introduced a clear plan for a responsible debt limit increase, they have no more excuse and refuse to negotiate.
McCarthy says the House plans to vote on the Republican proposal next week. President Biden, speaking in Maryland this afternoon to a crowd of union workers, says he wants a clean debt bill.
We've never, ever defaulted on the debt, and it will destroy this economy. And who do you think will hurt the most? You, hard-working people, the middle class, the neighborhoods I got raised in.
Some action on the debt ceiling is needed in order to avert default in the next few months. 2 teens are behind bars in connection to a mass shooting last weekend at a Sweet 16 birthday party in Alabama. 4 people were killed, more than 30 injured.
When you pull out a gun and you start shooting people, we're going to put you in jail.
Sergeant Jeremy Burkett is with the Alabama Law Enforcement Agency. He says the 2 suspects will be tried as adults. The former CFO of the Trump Organization is walking free. Alan Weisselberg has been released from Rikers Island Prison, where he was sent in January for being part of a 15-year tax fraud scheme at the former president's business. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We'll call it unchanged on the S&P right now. 20 minutes to go ahead of the closing bell. The Dow remains in the red. We've got NASDAQ higher by 15. Stocks, though, bottom line here, fluctuating between gains and losses. Here to sort it all out, let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. Like you said, U.S. stocks trading mixed today, with the Dow currently down 105 points. S&Ps are a little changed, and NASDAQ is still higher by 15. The U.S. 10 yield at 3.6%. Gold is down 10, oil trading in the red, and Bitcoin is down by 3.6%. Of the main 11 SB sectors, leaders were utilities and real estate. Telecom and energy were under pressure. And leaders to the upside in the Dow, Travelers and American Express, while Cisco fell 4.5% and led to the downside. After earnings, Netflix fell 3.6%, while Morgan Stanley reversed loss of 3.7% and is now trading in the green. In other news, regional banks are bouncing. Western Alliance is up 23%. And Morgan Stanley's Gorman said he doesn't expect any rate cuts to happen this year. Wrapping things up, some of the names pointing after the bell tonight include IBM, Tesla, Las Vegas Sands, and Lam Research. Live from the first breaking news desk on Bill Maloney. Charlie?
Okay, we thank you very much, Bill. We got you covered on those earnings reports. We'll be all over Tesla when that hits the tape. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
Yeah, how about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes left in the trading day. Really little changed here, just down about 0.3% on the Dow. So the biggest move on a percentage basis right now is for the Dow Jones Industrial Average. Call it flat, as you heard from Charlie, on the S&P, and the NASDAQ just up 0.1%. Hey, our next guest notes that with earnings releases picking up, some companies warrant some pretty close watching. So let's get to it with Burns McKinney, portfolio manager at the Global Value Equity Manager and Texas-based NFJ Investment Group. He is on the phone from Dallas, Texas. Hey, Burns, good to have you here with Maddie and myself. So tell me, out in Texas, what are people talking about?
Yeah, I think that people are still, we've been talking about inflation for quite some time, and it's something that, it's probably of all the economic statistics you look at, whether people focus on GDP or earnings, it's the one thing that's kind of right in your face. You go to the grocery store, you see the price of eggs. I mean, the price of gasoline is advertised in 5-foot letters on huge signs, and so people have been talking about inflation for quite some time, but we are starting to see a shift such that I think the focus is kind of moving towards the fact that the economy is starting to slow.
So talk to me, Burns, about the stickiness of inflation versus the indications that you're seeing in terms of slowing, because I have to wonder, I know you're in Texas, big oil state, but are you worried at all about these OPEC cuts making inflation stickier than we might be seeing in the data right now?
Well, OPEC, it really does appear that they've kind of settled on trying to establish a cost floor for oil of around $80. That's something that probably in many ways makes it sticky, but at the same time, that's something that as well, at some point you start lapping, these figures, and it no longer actually has the impact on inflation today. But really, investors are focused on inflation being sticky. There's been a lot of consternation of the fact that it hasn't been it's been pulling back, but it hasn't been coming down as quickly as a lot of forecasters and a lot of investors would really like to see it come down. And I think that's something that just really involves patience. They say that it took about a year and a half or so for inflation to kind of peak. And expectations should really sort of remanage themselves such that it might take a year and a half for it to actually come down to prior levels. And even then, it probably won't go all the way back down to that 2%, sub 2% level, because, there are some structural factors that may actually keep it a little bit more elevated than it's been. Really, I think the primary one being just the the reversal of the globalization and the nearshoring of supply chains may keep prices higher. But we do think that it's probably going to pull back and continue to pull back for the remainder of this year.
All right, what we love is when a guest comes on and they say, we've got some names we want to talk about, because we can get into the specifics, which I think our audience really appreciates around the much debate that we are having on so many different macro issues. So having said that, Zoetis, ZTS is the ticker, animal pharmaceuticals, if you will. This is a name that you like. It's up roughly 20% so far this year. I know people spend a lot on their pets. I know I spend a lot on my pets. I know private equity likes the pet space. What is it about Zoetis, though, that you really like?
Sure, yeah, and private equity definitely does. There was one of the European competitor was just announced an acquisition. Dechra Pharmaceuticals. An acquisition was announced just earlier this week. But I think this is a name that you're looking for companies that have company-specific benefits from long-term structural tailwinds, and they have a couple of big ones. This is a name that for those who aren't as familiar with it, it's really the leading pure-play global animal health company. It was spun out a few years back from Pfizer, and they split their business pretty equally between what they call companion care, i.e. pets, and livestock. And so the two big secular trends, one of which is you're just seeing increasing demand for global protein as you have a growing middle class. And then on the pet side, you're just seeing that, as you correctly noted, pets are becoming increasingly important members of people's families. And as that's happened,
costly members of the family.
There's been more penetration of medicines used for pets. And I could say for our household, they'd probably have me forego my meds before we would have our cat or our dog forego theirs. And that's something that makes it tends to be defensive for that reason. And it tends to give them pricing power, which is what you should look for in an inflationary environment.
So talk to me about Truist Financial, another pick of yours. It's a Charlotte-based bank. Why do you like it? Because we're obsessed with the regional bank story. So tell me more.
Yeah, this is one, for contrarians who are kind of looking for, the proverbial babies that have been thrown out with the bathwater with respect to, some of the recent banking turmoil. But, for one thing, we do tell our clients that a lot of the turmoil that we've seen around Silicon Valley Bank really was very company specific to them. They had some issues with hedging their assets, as well as a very concentrated deposit base. Whereas, Truist, it's now I think the sixth largest U.S. bank. So it does have good diversity of their clients. It was formed with the merger of BB&T and SunTrust, and so they're located in a lot of the great places. The South, the Sun Belt, where you do have good demographic and population growth. Right now, it trades at a discount to book value, which is a discount even to the regional banks. You have a 6% dividend yield that does look pretty safe. They hiked it by 8% over the past year, which demonstrates management's confidence in the business.
Yeah, not too shabby.
And you compare it to where there has been some of the turmoil. Roughly only half of their deposits run insured, which does prevent them from having any sort of run on the bank like you saw in Silicon Valley.
Hey, Burns, one last one I want to ask you about, certainly, because real estate is on our minds, as you know, and wondering if that's the next shoe to drop coming off of the bank crisis, not crisis, if you will. Alexandria Real Estate, ticker is ARE. It's off about 15% so far in 2023, $21 billion market cap. They play in the pharma space, personal care, research. 30 seconds. Why, though, this name?
Right now it's trading about 13.5 times fund from operations. You have a nice 4% dividend yield, which we love. And what they do is they own office and lab space. They lease to pharma, biotech, and diagnostics. And so, sometimes people sort of misclassify it. They think of it as being more of a real estate play, but really it tends to trade more with the biotechs. And they have long-term relationships with whether it's academic institutions, all the places you want your kids to get into college, Harvard, Stanford, Duke, as well as a lot of the big pharma companies. And they have a great track record of growing their funds from operations every quarter for just like 5 years. And so it doesn't really trade like the REITs, and as a result, it should give investors a little bit of defensiveness in a volatile market.
All right, but as we said, down about 18% so far here in 2023, and that's after a year where we know a lot of asset classes and assets were really beaten up. It was down about 26%. Hey, Burns, thank you so much. Burns McKinney, he's portfolio manager at NFJ Investment Group, joining us on the phone from Dallas, Texas. This is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. Late day fade. We've got NASDAQ just turning negative. A headline to pass along to you from the Bloomberg Professional Service. According to the information, SeatGeek filed confidentially for an IPO this month. Minutes away from the latest quarterly numbers out of EV maker Tesla. Tesla cutting prices in the U.S. for the second time this month, and just ahead of its latest earnings report, further demonstrating Elon Musk's willingness to sacrifice profitability for demand for its EV lineup. Kevin Tynan is a senior auto analyst with Bloomberg Intelligence, and Tynan was interviewed earlier today right here on Bloomberg Radio.
The disadvantage to Tesla, Lucid, Rivian is that in that market or in that segment, there's nowhere else to go. Where if you look at Ford basically stopped building Mustang Mach-E at the beginning of the year because that demand wasn't there.
All three automakers, all three electric automakers that he mentioned, Tesla trading lower now, ahead of earnings, down 2.1%. Shares of Lucid, they are down 2.8%. Rivian Automotive down now by 4.6%. Tesla, by the way, marking down each version of its Model Y SUV by $3,000. Meta Platforms cutting jobs across the company today as it restructures teams and works toward founder Mark Zuckerberg's goal of greater efficiency this year. And Disney plans to cut thousands of jobs next week. And those are some of the company stories that we're following for you at this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, just under 5 minutes left in today's trading session. Charlie talking about a little bit of a leg down here, so we're off our best levels of the session, but still little change on the S&P, Dow down about 1/3 of 1%, NASDAQ, just call it flat there, barely holding on to a gain. So we'll see. Certainly investors are waiting a slew of earnings after the close, including a really important one like Tesla. You've got Zions Bank, you've got IBM. We're going to get a lot, so we'll be breaking it down in just a moment. In the meantime, maybe some lighter fare or just a sign of the times, and that has to do with olive oil. It's expensive.
It's expensive, a 27% jump in the price of olive oil. And of course, this is hurting who most? The Italian families already reeling from the lasting increases of cooking staples that make up Bloomberg's famous Pizza Margherita Index. I love this story so much, flagged by our incredible team member, Sarah, earlier today. It's just so
She's
interesting.
Like, I love that index too, right? It's a great one. The condiment found in kitchens across the peninsula is the only one of the 5 tracked ingredients for the quintessential Naples dish that is still getting more expensive at a faster pace. We're talking about olive oil. Overall cost of making a pizza at home over in Italy for Italian families has now been at least 20% higher than a year earlier for 8 months in a row. I don't know about you, but when I order, depending on where I'm ordering from, it can be pretty expensive.
Yeah, well, it's I would love to see, I'm sure we have this somewhere, but like, what is the most expensive recipe out there because of inflation? I feel like Bloomberg...
They put truffles or truffle oil on it, right?
Smart.
Okay,
Yeah, that's
I'm thinking that might do it. They say, though, the price of olive oil over in Italy reflects a devastating drought that is afflicting Spain, the world's biggest producer, at a time of dry conditions in the rest of Southern Europe. Folks, we've been talking about it all week. We've been taking a look at food production, agriculture, the impact of climate change, what it does on climate change, and also how climate change is impacting food production. There's a story that runs right to it.
Yeah, and the story notes really critically that Italy is really vulnerable to a lot of commodity shocks that impact those basic staples for families, including olive oil.
Yeah, go back to the macro stories of what maybe will keep prices higher. And even though the Fed says 2%, it's a target, it's real, maybe it really isn't. Maybe it's more like 3% because of the macro effects of climate change, pushback on globalization, and so many different things that are going on in our world. Whew, it's a lot.
It's a lot.
It's stressful.
A lot. And guess where we're going to talk about even more?
Earnings, and maybe the inflation play when it comes to earnings. Hey, folks, time for our cross-platform coverage. We've got the close coming up beyond the bell right now.
Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. Here to take us beyond the bell. It's a global simulcast.
You sound excited.
Carol Master and
Tesla?
Madison Mills.
IBM
I'm always
earnings?
excited, Carol,
Are
to
you
talk to
really?
Madison Mills. You know that.
I know that.
Welcome to our
That's okay.
audiences across Bloomberg
Who can blame
Television,
you?
radio, as well as originals and
Just
those
to make up
folks
for the fact
streaming
that there's nothing going on in the market.
YouTube. Now, actually, in all honesty, though, I mean, we talk about how tepid the price action is, but I do find this fascinating here. Sometimes the lack of action can be very telling about where the minds of investors are at.
No, that's a really good point, right? Nothing happening tells us tells us a lot. Having said that, there's a fair amount of activity when it comes to bank stocks. I mean, we just got a bunch of big, bank earnings, another dump certainly this morning. There's more to come. KBW Bank Index, guys, up. What?
Nothing, go ahead.
Is up about 1.7%. So easily some outperformance there, and a bunch of names in the index are trending higher.
Yeah, it's to your point, Romaine, it's such a stale kind of day here. We've got the VIX down to 16 almost, and just the subdued nature of volatility indicating maybe some strength. We're seeing equities driving higher in light of quote unquote bad news, I guess. It's hard for me to kind of make sense of.
Right, and I think investors are struggling to do that as well. There isn't really much visibility so far from the earnings that we have gotten, and of course the data that everyone parses to get a sense of where the Fed goes next, and the Fed speak that does come out on a daily basis doesn't point to any clear direction either.
And we do get the closing bells here in New York. And, well, it's a relatively unchanged day here with the Dow Jones Industrial Average in the red, only down about 80 points or so as you wait for these numbers to settle. That's going to end up being about a 0.2% drop here on the day. The S&P 500 right now camped out right around 4,154. We're waiting for these numbers to settle, but it's basically unchanged on the day. It's down less than a point right now. The NASDAQ kind of opposite story here, up by about 4 points, and that is good enough here for a gain in the green on the day. The relative outperformer on the day, and this I think gives you a sense of just how tepid this day is a 0.2% gain on the Russell 2000.
Yeah, tepid day, and then you've got the VIX down about a half a point, 16.35. I mean, again, it's just kind of staggering, Scarlett, to see the amount of complacency and the amount of, how low the VIX seems to be going here in this environment, but there's a fair amount of questions.
Yeah, absolutely. You said that very well. I'm looking at the sector performances here too, and with the S&P 500 finishing unchanged, it's interesting to note that auto and components, and here we're talking about Tesla with its 6th price cut, is leading the auto stocks down by more than 2%. Telecom stocks and media stocks also lower. Of course, Netflix earnings not helping. On the upside, you've got transportation names, retailers, and utilities leading the advance.
All right, so let's get to the individual gainers as we await some earnings. Intuitive Surgical, number 2 in the S&P 500 in terms of gaining. Number 1 gainer in the NASDAQ 100, up about 11%. Coming out, reporting earnings last night. Stock soaring, I think, to about a 1-year high. Reporting procedure growth for the first quarter that beat. So that was really some good news, and it really lifted the overall sector. UAL, United Airlines, check it out, pretty much finishing at its best levels of the day, up 7.5%. It, too, was, I think, the number 4 gainer in the S&P 500. International travel coming back. You also saw lower operating costs, so this was a big deal. And I think this is the highest level that we've seen in about 3 months on this, or the biggest move, I should say. And then Amazon, it was a top gainer in the NASDAQ 100, just up about 2% there. And then we did have CNBC reporting that Amazon started laying off workers.
Yeah, before we get to the decliners on the day, headline now on the amount of tax receipts coming into the U.S. Treasury. The Treasury's cash pile, which remember hit a low of about $86 billion just last week, now has swelled back to about $253 billion. Of course, tax filing day was on April 18th yesterday here, so it's not unusual to see these types of upticks in the 2 weeks surrounding the tax filing deadline. Of course, much more important this time around, guys, because of all the concerns here about the debt ceiling issue, which still has not been resolved.
Yeah, it's really critical, especially as we see Western Alliance rising 24% on the close. We keep getting these good bank earnings, but I am going to bring us to some of our decliners on the day, none of them being banks. We've got CDW among the worst performing stocks in the S&P today. We've been talking about this. The IT providers reported preliminary first quarter revenue that missed estimates. They said clients are skeptical about demand and how much money they want to be spending. And the question here is that indicative of what we're seeing in the tech sector more broadly, kind of a disconnect disconnect between supply and demand. And then we go over to ASML. This is the Dutch semis equipment maker. They did not have a good read on their demand either. We had a warning earlier in the week from TSMC cutting their CapEx because maybe demand doesn't support supply. Again, continuing that big supply and demand question there. That news not being received well, even in ADR's stateside. And then we've got Tesla. We're getting those earnings coming in a little bit on the close here. Right now down a little over 2%. And I think, Romaine, you're going to give us some of the news on those Tesla earnings.
Tesla earnings crossing the wire right now. The main headline here is on the 1Q adjusted EPS number coming in at 85 cents a share. The street was looking for 86 cents a share here. We're still going to take some time to dig through these numbers here. So basically relatively in line with what the street was looking for. The company is providing some guidance here saying that it does expect to remain ahead of its long-term target for 50% compound annual growth with regards to its production rates. Remember, Tesla has given this guidance before. There have been a lot of questions as to whether it would stand by that guidance. It has said on at least 2 previous occasions that it would stand by that guidance, and it's saying now, today, that it plans to stand by that guidance. The company said it still sees full-year production coming in at about 1.8 million vehicles. The street, on average, would be looking for about 1.8 million vehicles. A couple other numbers, guys, I just want to get to here. 1Q revenue coming in, Scarlett, $23.3 billion. That's roughly in line with what the street was looking for.
And the stock right now moving marginally lower in after-hours trading. Tesla also saying some stuff about Cybertruck, too, because...
This is interesting.
Yeah, it's on track.
The Cybertruck is on track to begin production later this year. And this has been a big debate here because he's obviously hyped this.
Yep.
But the idea, too, that a lot of people have really been talking about this idea of a refresh of the styling and just kind of what they have. And really, I mean, when we saw sort of those preliminary look of that Cybertruck and how stark it was, I think that's what people wanted to see. Can he bring something like that to market? And at least according to this headline, they will be on track to begin production later this year.
That leaves a lot of
now,
wiggle
they've been
room.
on track to begin production on this before.
Well said.
So.
The other number that it just came out was first quarter gross margin, 19.3%. The consensus estimate was from 21.2%. Tesla, of course, compared to other car makers, has a lot of room to play with when it comes to its profit margin here. So, of course, the price cuts that it's employed has certainly eaten into profit margins, but at 19.3%, still well ahead of rivals.
Yeah, I'm looking through the summary from Tesla. Although we implemented price reductions on many vehicle models across regions in the first quarter, our operating margins reduced at a manageable rate. We expect ongoing cost reduction of our vehicles, including improved production efficiency at our newest factories and lower logistics costs, and remain focused on operating leverage as we scale.
A couple other headlines that we should focus in on. Free cash flow at Tesla coming in at $441 million. That's well below where it was in the previous quarters here. The street was actually looking for free cash flow coming in at $3.24 billion with a B here. We'll double check to make sure these numbers are right, but our crack team at Bloomberg digs through these results, and that is the headline crossing the wire right now. The company is also saying, though, that it still expects to see its operating margin at its highest in the industry, so basically relative to its competitors.
Yeah, that free cash flow is just really interesting given that we've continued to see Musk cutting those prices for the second time just in the past month, Carol.
And I think what's interesting, and this is what we have to figure out, this stock is up almost 50% year to date. It's still down more than 50% from a high back in November of 2021. You got to look at the valuation with these price cuts. Does it make sense? And this is what we're going to try and figure out.
And just real quickly, guys, when we talk about the cash flow and more importantly, those price cuts that we've been reporting on, I don't know if we read this off, but the gross margin coming in this quarter did actually dip below 20%, coming in at about 19.3. The street was actually looking for 21. But we should point out, I mean, this was a gross margin that just a couple of quarters ago was actually in the high 20s.
But do you make it up on volume? And this is what I think the strategy is for Elon Musk, right? They have the first mover advantage. We know that in a big way. There's a lot more,
But that first mover advantage is, I mean, we've moved on. I mean, have you gone to a Ford lot or a GM lot and seen the EVs out there?
They're different. I would say they were different buyers, though, also.
Yes. Yes.
Yeah, and I don't know that Tesla and Elon Musk necessarily cares that much about a price war with those other companies. I think he's just really focused on the Model Y there, and we're seeing that shares are falling in aftermarket
More headlines
trading.
coming from Tesla here. They are saying that they do see an ongoing cost reduction. of our vehicles.
So 6 price cuts is not enough. Perhaps there will be more as they continue to make sure to protect their market share and perhaps build on it and ensure that that first mover advantage is intact.
Another interesting quote, pricing to continue to evolve, Scarlett, either upwards or downwards. So
basically we can do anything.
I guess you could definitely believe that line. It's definitely going to go one way or the other.
Absolutely.
You guys, it is Elon Musk.
He's giving himself a lot of room here.
All right, stock down about 1.7%, so we'll continue to track it, certainly in the after hours and into tomorrow's trade. All right, that's a wrap. More earnings to come, and I know you guys are going to be covering it, and we are as well. This says IBM is crossing. We'll see you again, same time, same place tomorrow. Just a moment, but I do want to mention IBM crossing the Bloomberg as we speak. And IBM first quarter revenue, $14.25 billion. That is a slight miss here. The street was looking for 14.33, so we're seeing shares of IBM down about 1.3%. So continuing to look, the company also saying it sees annual sales in line with estimates amid demand concern. But right now, IBM shares are flat. All right, let's get back to Tesla because that is certainly a big focus for investors. Stock down just about 1% here in the aftermarket. We talked about the valuation, especially as the company continues to cut prices. We talked a little bit about margins, a little bit light based on what the street was expecting. So let's get to the valuation side of the story and the fundamental. Esha Day is Bloomberg News equity markets reporter here in our Bloomberg Interactive Brokers studio, along with Gabby Coppola. She is Bloomberg News auto reporter. She's on the phone in our Detroit bureau. And I do believe, Gabby, we've got to start with the fundamental story. What are some of the key takeaways that you see? We just were kind of running through the numbers with our TV colleagues, but what jumps out for you?
Hey, Carol. So, I think going into this, we all knew that margins were going to suffer because Tesla has been implementing price cuts around the world. But I think a floor that the street had was 20% gross margin, and they came in with 19.3% gross margin. So it's not a lot of difference, but that's sort of the floor that we thought they would try to stay above, and they didn't this quarter. And if you look at, I'm just going through the letter, Tesla's letter to investors, and the opening line talks about in this current macroeconomic environment, this is a unique opportunity for Tesla. It talks about how basically they are going to underprice their competitors.
We've seen this. We see this right with. I mean, China has done it right on steel and clothes, and So I mean, we understand the strategy. To be fair.
Yes, but Tesla does. China is a huge market for Tesla, and they do have a assembly factory in Shanghai. But that I don't think it's not totally the same thing as like the China. I mean, Tesla still builds vehicles in America, I think, and employs people in the United States, and is doing this in the United States, a lot of it. So. Including the Cybertruck, which they just said also that is on track to come later this year, start production later this year, I should say. So it's really about thinking about, Elon Musk from the beginning, even when he was talking about going through production hell, we didn't think he was going to make it. He has always, always, always stressed that he was going to drive down costs. Mm-hmm. And now we're going to see him leverage that. And it's just a matter of if you've been doing this, for a decade versus, GM or Ford or Stellantis or Volkswagen or whoever who are kind of just now coming into this. Even though they're, legacy automakers with a lot of manufacturing experience, Tesla has more experience than they do at building EVs. And that gives them the advantage to do that. I mean, that's part of it.
So, and this is what's key. We're talking about not just when you say driving down cost, the cost of producing it as well as the cost of the actual vehicle, both?
Yes, I think, yes. I mean, the way he can cut, he is betting that, you see I cover Stellantis, right? So the CEO of Stellantis will always brag about how he has car sales around the world could drop 40%, he would still make money. And that's because you take a lot of cost out of your manufacturing. And Tesla has sought to start producing batteries in-house. They're talking about processing their own lithium to make batteries in Texas. They make a lot of parts in-house. They're not like other car companies that buy all this stuff from suppliers, down the supply chain. That's what we saw during the chip crisis. Tesla did, everybody suffered in the auto industry, but Tesla did fare better because they did so much of this stuff in-house that they could be nimble. They could take a semiconductor chip and rewrite the code and make it function for another purpose or another thing inside the vehicle.
Yeah.
So, yeah.
Well, Aisha, I want to bring you in here. Tell me what you're thinking about the market reaction. Is there more disappointment than you'd anticipated?
That's a great question. So as Gabby mentioned, the 20% gross margin was sort of the hard line that everybody was looking at. Investors are trying to understand, this land grab that Tesla is kind of getting into. At what price is it coming for?
So let's talk valuation, right? Because if you pull it up, I mean, we've got Tesla at a current PE of about 52, a forward-looking PE of almost 46. And we know investors were going to be focused on this, especially with a company that's been cutting prices.
Absolutely. So that margin is one of the big cornerstones of the valuation that Tesla has. And the Tesla is valued at 47, 50 times earnings, forward earnings. When you talk about GM or Ford, that's about 6, 7 times. So, a disappointment on margin is a big disappointment when it comes to Tesla compared to any other automaker, because that is sort of the cornerstone that's holding up the valuation. So if GM has to cut prices or Ford has to cut prices, that's still understandable. But Tesla, even though it has scale, does it have scale at that point where it can hold up the valuation? Can it bring in as much revenue, even more scale, and really cut down the cost of making those cars to, at some point, drive these margins back up?
Yeah, so Gabby, should we be valuing Tesla differently than a GM or a Ford?
Ooh, that's a very controversial question. Obviously, for years we heard Wall Street say that this was a tech company, not a car company.
Right.
I kind of feel like both are true.
I was going to say, as you report on it, how do you think about it?
I take the technology company stuff with a grain of salt, because at the end of the day, they're still metal bashers, however much they don't maybe want to escape. I mean, yes, and when you see Elon, and I look at this investor letter and they talk about their strategy going forward, they're talking about we're still making investments in autonomy and vehicle software. So that speaks to the tech question you're talking about. Tesla believes that they, obviously they're quote unquote full self-driving, which is not full self-driving, but they're, autonomous features in the car that have gotten them into hot water with regulators. Nonetheless, they believe, Elon still seems to firmly believe that is a growing revenue source in the future, along with other software services in the car, and that's something that all the car makers are looking at now. They're trying to not just be metal bashers, but they also want to sell services to consumers through the car, which obviously pits them against Apple and things like that. There's one other point I wanted to make, Carol.
Yeah.
As we think about this, don't forget about China. I'm just looking at, there's been a lot of headlines about what's going on in the auto market in China. Elon had a very interesting relationship with China. All the other automakers were forced to do joint ventures where there would be tech transfer with their Chinese competitors.
Not Tesla.
Elon held out, right? He never did that. He came in and built a plant, once he was able to own it himself quickly. Yeah. Nonetheless, you see BYD, you see these other domestic Chinese car companies gaining share in the Chinese market. Not just Tesla, but everybody is kind of feeling the pressure there from some of the Chinese car companies have matured and they're making some good product now.
Which is another thing to think about when we think about the valuation of the company. Yeah. Maddie, I know you wanted to ask about one thing when it comes to Tesla.
Gabby, real quick, Inflation Reduction Act, they reported an increase in regulatory credits this quarter. How big of a deal is that for Tesla moving forward?
Okay, well, I think it is going to be significant, and the CFO, Zach Kirkhorn, talked about that last quarter, and I'm definitely going to be watching for his comments this quarter. But let's just make it clear in folks' minds, one thing is the regulatory credits, and that's been around for years, and that's basically when another car company can't meet the EPA's fuel economy rules, they can actually buy credit from Tesla, which has nothing, because Tesla does not make combustion engines, right? They're all zero emission vehicles.
Right.
So that has been another kind of revenue cushion, margin cushion for Tesla is those credits. But as more car companies get electric vehicles, they don't need to buy from Tesla. I mean, for example, Chrysler, now Stellantis, had a huge deal with Tesla, and they weren't the only one. So I'm trying to look at it. Let's see, I'm trying to look for regulatory credit. But basically, let me just say, the IRA is a different deal. The IRA is about the Biden administration, the federal government is paying companies to make batteries on U.S. soil.
Right.
Tesla already has a completely scaled, and they're going to expand it, Gigafactory in Nevada. and they have one in Texas. They have it in Texas. They're building batteries in Texas. So that's another source of government revenue, and it's all about how many batteries, how many kilowatt hours of batteries you make. Well, guess what? Like I said, they have first mover advantage. Tesla has been doing this longer, and they're further along.
This is what Elon's
advantage.
like when it goes back to Esh's story that's on the Bloomberg, and you should check it out. This is why Elon's like, yeah, my valuation, I got it. I'm worth it. All right, guys, thank you so much. Great breakdown. Gabby Coppola, auto reporter at Bloomberg News.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Tesla shares after hours now trading lower. Tesla down 3.3%. It is sticking with its full-year forecast of around 1.8 million cars. It also says the Cybertruck will begin production later on this year. First quarter gross margin 19.3%. Estimates were for 21.2%. Gabrielle Coppola covers the auto industry for Bloomberg News out of our Detroit bureau, and she was interviewed moments ago right here on Bloomberg Business Week.
I think going into this, we all knew that margins were going to suffer because Tesla has been implementing price cuts around the world. But I think a floor that the street had was 20%. gross margin, and they came in with 19.3% gross margin. So it's not a lot of difference, but that's sort of the floor that we thought they would try to stay above, and they didn't this quarter.
And again, Tesla shares after hours down by roughly 3%. Also reporting moments ago, we heard from IBM. It gave a forecast for annual revenue that was in line with analyst projections, delivering a cautiously optimistic signal about tech spending in an uncertain economy. The Dow, the S&P both lower today. Truthfully, little changed on the S&P 500 index. Spent most of the session fluctuating, but in the end, turned out to be a down day, falling by just about half a point. NASDAQ today higher by 3 points. Little change there, up less than 0.1%. The Dow down 79, drop there of 0.2%. 10-year yield 3.59%. The 2-year 4.25%. Spot gold 19.94 the ounce, down 0.5%. West Texas Intermediate crude down 2.2%. 79.09 a barrel. Again, recapping here, Tesla lower after hours, down now by 3%, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Great setup, because we want to just stay with Tesla for a moment, because as Charlie said, stock's still lower in the aftermarket, reporting its first quarter earnings that just missed analyst estimates after a series of aggressive price cuts squeezed profit margins. I mean, they just had another price cut today. Like, it's just, I think this is 3 in kind of a short period of time. Revenue up to $23.33 billion in the quarter. That was nearly in line with our own Bloomberg estimates of $23.35. So call it spot on. Profit, if you back out some items, falling to 85 cents a share. That was slightly below the 86-cent average of estimates compiled by Bloomberg. But what we really cared about was operating margin, which Tesla said was 11.4% in the 3-month period, down from 16% last quarter and down from 19.2% a year ago. And this certainly plays into, while the car maker is playing down its recent price cuts, it actually said its operating margins fell at a manageable rate. I mean, the street is looking at that because that's a key metric.
Yeah, and 2 things that are really standing out to me right now, Carol. Automotive, I should say, gross margin was kind of the key thing to watch heading into these earnings. It was left out of this earnings report for the first time in a while, so all we have to go on is the total gross margin, which, as you mentioned, did miss estimates a little bit, coming in at 19, and the street was looking for 20, around 20 on that. The other thing that our autos reporter Dana Hull, who is our key expert when it comes to tech, and Elon Musk points out, is that inventory for Tesla rises to 15 days from 13, which is surprising given the double price cuts from this month across the board for all of its models. In the past, Tesla has blamed its backlog on logistics. Musk has promised to address it. So is that going to continue to be the reasoning, or is there a different demand issue occurring here? And I think we'll have to keep looking at the earnings report to kind of suss that out.
Yeah, absolutely. And there's a lot certainly in the quarterly earnings release here. And as we talked about, in terms of margins, being able to, that Tesla saying, we're on it. They're also talking about, watching costs and so on. So it'll be interesting to see if Tesla shares, which are down about 3.4% and have been on quite a tear, whether or not there's a rethink, certainly tomorrow or later on tonight when analysts come out with their reports, whether or not they change their thinkings in terms of the price target potentially, or their valuations on the company in particular.
Yeah, and some other headlines that I just want to point out that are I think, pretty critical here. Cybertruck on track to begin production later this year. That's going to be a big boon for Tesla once that makes some progress. They're continuing to make progress on the next-gen platform. And just an interesting quote from the earnings. They basically say pricing is going to continue to evolve upwards or downwards. So,
which is kind of funny.
Kind of funny. I feel like it mirrors the Fed. They're leaving room for themselves to kind of go up or down there. Also interesting to note, solar deployments fell sharply quarter over quarter to 67 megawatts from 100. The company had deployed at least 94 megawatts in the final 3 periods of last year. So again, cutting down to 67 megawatts of solar deployments. That's interesting to note there.
Well, and it's a reminder that, Tesla isn't just automotives, although it is the bulk of their revenue, but energy generation and storage is certainly another part of it, and so something to keep in mind. In terms of specific models at Tesla, The Model Y, top-selling vehicle in Europe during the first quarter of 2023. In the U.S., it was the best-selling vehicle, excluding the pickup category. That's a pretty big caveat given how popular vehicles like the Ford F-150 and Chevrolet Silverado are. So it's just, as our team is commenting in our live blog, undeniably impressive for the Model Y as its sales continue to increase. Last year, our Bloomberg New Energy Finance group had the Model Y selling 754,000 units, making it the highest selling EV globally. Again, this goes to the market is getting more crowded. I know Romaine addressed it when you go to, a Ford or GM lot, like there's a lot more electric vehicles. I would argue that that is a certain segment of the market. Tesla, certainly a lot more higher end in terms of the costs. If you look at what their offerings, even though they're bringing those costs down substantially, in some cases, cutting it about 29-30% on some models. But there are a lot more higher end also coming into the market. EVs, such a small part of the world. There's a lot of electric vehicles to sell globally.
Yeah, and I have to wonder to what extent, the Fords of the world, I know you flagged this question for our last guest, Carol, should we be evaluating Tesla differently from a GM or a Ford, given that I don't know if Ford necessarily cares if Tesla eats up the EV market share, given that Ford isn't going to be profiting as much off of those EV sales as a Tesla is. And that's also interesting given that Elon kind of set us up for this. He said he was going to chase volume over profit margins last year.
Right.
And today we are sort of finding out the impact of that promise.
All right, well, let's see what Ross Gerber has to make out of all of this. He's president and CEO of Gerber Kawasaki Wealth and Investment Management, a Tesla shareholder, a Tesla car owner, once wanted a board seat and then did not. He's with us, back with us on Zoom from Santa Monica, California. Hey, Ross, good to have you here. I know you're looking at all the news coming out of Tesla. Stock is still down, I think about 3 or 4% here in the aftermarket. What jumps out for you?
Well, what jumps out for me is what I've been saying forever, which is Elon needs to spend some money on advertising instead of just sacrificing gross margins and cash flow to lower prices. And he's treating the car like a commodity. And so, if there's less sales, they just lower the price. And if there's more sales, they raise the price. But that's actually not how you sell cars. So I think that this quarter was in line with our expectations. So that's the positive. It wasn't worse. But, when sales are up 40%, but revenue and profits are down, there's an issue you got to deal with, and blaming the macro environment, like a lot of people want to do, isn't accurate, So Tesla needs to address the demand side of their business, whether they like it or not.
Well, to be fair, they also blame the weather in California. Ross, I think
that was for solar deployment, though. But yeah.
Yeah. Fair enough. Do you think on the valuation side, has your perspective changed at all? Do you think the valuation is fair?
Yeah, I think the valuation is fair. And I think we've been running at 50 times earnings. And originally, about 6-8 months ago, our earnings expectations for this year were $6. So we were at around $300 for Tesla, and now they've been lowered to under $4. So if you do 50 times $4, you're at $200, right? And now we're seeing earnings that might not even make $4. So I don't think the stock's acting irrationally. And I think for investors who have a long-term focus, Tesla's trading for what it's worth. And so if you're a long-term investor, it's a good value. But if you're a long-term Tesla shareholder like myself, it's very disappointing to see earnings going down.
Right. You buy, you sell shares of Tesla. We know that. We've talked with you a lot. Would you buy at this valuation and as the stock is going down about 3 or 4% here, at least in the aftermarket?
Well, I think you have to look at it from the perspective of if I'm an investor with cash and I'm looking to make investments, would Tesla still be one of our top investments? And absolutely it would be. But the question is if you're heavily invested in Tesla today and that's all you own is Tesla, is this a smart investment strategy? And I would say no. There's a considerable amount of risk that wasn't in Tesla a year ago.
So are you upbeat, though, that they're saying they are seeing an ongoing cost reduction of its vehicles? You know what they're doing, right? They're cutting prices to grab more of the market, but they're also saying we're going to be able to cut the cost of production. Do you believe it? Can they do it?
Well, I was just there. Absolutely, They can do it because they got a massive factory that's only producing a couple 100,000 cars that can produce over 1 million cars. So when you think about the point of scale that they're in, there's no doubt that they can cut the cost of the car. But the problem is as they increase production, can they sell all these cars?
Right.
And if they continue to lower prices faster than costs are going down, then we've got a real bad situation for Tesla. And And that's what my concern is when you haven't tried all the levers to sell cars. But one thing I think we can safely say that Elon's new job at Twitter is not helping Tesla sell cars.
Yeah, and if they're going to do some advertising, cuts into margins. Do you hate that he's cutting prices? Just got 30 seconds, 25
Absolutely.
seconds.
I think Tesla's a premium product, and I think it serves what we call the mass affluent marketplace, which is massive. And I think the continuing and cutting prices actually hurts the brand. And so I'd love to see Tesla try to hold prices here and try to sell cars any other way.
All right, going to leave it on that note. We know a busy afternoon, so appreciate you weighing in. Have you been buying prices? Any Teslas on the price cuts? 10 seconds.
Well, no, I already have 2 Teslas, and they've lost value, so I'm not happy.
All right, well said, well said. Ross Gerber, thank you so much. President and Chief Executive Officer at Gerber Kawasaki Wealth and Investment Management on Zoom from Santa Monica. We're watching shares of Tesla in the aftermarket down about 3.7%. All right, let's get back to world and national news. Off to Nancy Lyons we go. She is in our D.C. newsroom. Hey, Nance.
Thanks, Carol. Some news out of the Supreme Court today on the abortion pill. Bloomberg Law host June Grasso with the latest.
Justice Samuel Alito extended the stay on new restrictions on the abortion pill until Friday at 11:59 p.m., giving the justices more time to decide how to handle the case, the first abortion test for the Supreme Court since it overturned the landmark Roe v. Wade ruling in June. At risk is mifepristone, the drug used in more than half of U.S. abortions. June Grasso, Bloomberg Radio.
Among those applauding the nearly $800 million settlement of the Dominion voting machines defamation case against Fox News is Georgia's Secretary of State, Brad Raffensperger.
We were vindicated. It's taken 2.5 years to finally get this to trial, but when it did, there was a lot of findings of fact prior to the settlement that have shown that what was put out there by Fox News was misinformation, disinformation, and it was never supported by the facts.
Raffensperger tells Bloomberg Georgia did a hand count in the 2020 election that matched the results from the Dominion voting machines. Authorities in Dadeville, Alabama say they've charged 2 teens with several counts of murder in connection with a weekend shooting at a Sweet 16 birthday party. 4 people were killed, more than 30 wounded. Jeremy Burkett is a sergeant with the Alabama Law Enforcement Agency.
With the violence that went on and the magnitude of what happened, we are absolutely still in the early stages of this investigation. This is absolutely the beginning. This is not the end.
Sergeant Burkett says additional arrests and charges are possible. The family of Tyree Nichols is filing suit against the city of Memphis, as well as officers and medical personnel involved in his case. Nichols died 3 days after a severe beating by officers following a traffic stop. The family is seeking a jury trial in financial damages. Global News 24 hours a day. I'm Nancy Lyons.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Right now, we are keeping an eye on shares of Tesla. After hours, we've got Tesla stock down by roughly 4.5%. Tesla reporting first quarter earnings that missed analyst estimates after a series of aggressive price cuts squeezed profit margins. Ross Gerber is the CEO at Gerber Kawasaki Wealth Management, and he was interviewed moments ago right here on Bloomberg Business Week.
I think that this quarter was in line with our expectations, so that's the positive. It wasn't worse, but when sales are up 40%, but revenue and profits are down, there's an issue you got to deal with, and blaming the macro environment, like a lot of people want to do, isn't accurate.
And Gerber, of course, owns Tesla shares, also drives a Tesla. Tesla right now driving lower by 4%. The Dow, the S&P, they declined today. NASDAQ was higher, eking out a 3-point gain. S&P down today by 0.5 point. Little change there. The Dow down 79, drop there of 0.2%. We've got the 10-year at 3.58%, the 2-year 4.24%. Spot gold down $10 the ounce to $19.95, drop there of 0.5%. West Texas Intermediate crude down 2.3%, $79.02 a barrel. Stocks little change. Bottom line today, investors were assessing another batch of corporate earnings. They also remain focused on the Federal Reserve and inflation. Burns McKinney is portfolio manager at NFJ Investment Group, and here on Bloomberg Business Week, he told us inflation is just impossible to ignore.
It took about a year and a half or so for inflation to kind of peak. And expectations should really sort of remanage themselves such that it might take a year and a half for it to actually come down to prior levels.
And again, recapping, stocks lower, S&P down 0.5 point, 10-year yield 3.58%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, a lot of earnings after the close. Charlie covering it all. Charlie, thank you so much. So we continue to track developments daily when it comes to AI, in particular generative artificial intelligence. Increasingly creeping into the conversation is also the creepy thought that AI is like a person, sentient. There's a great story on the Bloomberg about that, and reminding us that machines are not conscious. So let's get to our next guest, see what he has to say about what's going on when it comes to AI. He is head of and co-founder of a company that has been named to Fast Company's prestigious annual list of the world's most innovative companies for 2023 when it comes to the AI category. With more on that, and let's get into the company. It's an AI-powered app development platform, builder.ai. I think I need AI right now to help me read. We welcome co-founder Sachin Duggal. He's Dev Duggal, co-founder and chief wizard of builder.ai. He's here in our interactive broker studio. Sorry, my introduction was too long. I should have just said hello, come in.
Hi, thank you so much for having me.
Good to have you here with us. Tell us, first of all, what your company does specifically.
So we allow people who don't understand technology to be able to build software.
So anybody can build?
Anyone. And why is that important, right? If we think about every small business, every department in a large company, every entrepreneur with an idea, they need to be digitally native, but they have no idea how to be digitally native. The average person, when you say Java, thinks coffee bean at Starbucks. And when you ask them how do they use Excel, they use a calculator with it. And that's the average audience. And how suddenly do they become relevant in a world that's so digital?
Can't they just hire somebody to be digitally native?
Yeah, and you have 500 million developers worth of demand and 50 million developers worth of supply. But the issue is much bigger than that. I give you a really funny analogy. So I have 2 little children. And if you say to them, paint me Picasso in art class, it's pretty bad. Then you put 5 pictures of Picasso around it and say, paint me Picasso, it's much better. And then you say to them, you can cut up these 5 paintings and make Picasso, and now it's something you'll put on the wall. And I think, how we build software to people that are not technical is the same thing. They need people to pick and choose things from things they recognize, just like they order food at lunch or they order a kitchen. And that's how software should be.
So what are you seeing in the trends of the entrepreneurs that are coming to you to use your platform? What's changed? What's been the single biggest change you've seen over the past couple of years?
So I think firstly, the speed at which people are coming and the sheer velocity. COVID was interesting. It was like a massive tailwind. Yeah. But it was a gating function. It's like, we're not going back to the old way. I think the second thing we've seen is it went from a nice to have, where I might speak to my cousin or the person down the road to help me build a website or help me build an app, to my business is not going to work unless I have this working or this problem solved, or I'm not going to succeed in my job in the finance department in a company.
Yeah, that 2-year plan to be really all in on digital?
Yes.
Got to do it now.
Yeah, it's accelerated. And I think that the third has been, for us, is people have basically let go of the idea that I need to be a developer or I need to be a programmer, and they are all in and saying, I just need to get on with this now. So to the extent that someone can help me, I will take it.
You guys are powered, as we said, or I tried to say in the introduction, AI-powered app development platform. So what is the role of AI in this?
So there's a couple of things. Firstly, our user experience with the customer is like a Domino's pizza experience plus conversational AI. So you talk to the system. And as you talk, Natasha, our AI, will understand what you're saying. And we'll say, okay, let me ask this question. But she may not ask the question, the human might ask the question. And that's important because we're still at a stage where AI is a toddler, not an adult. And so having a human in the loop is really important. And we've realized this in our own experience. The second is there are things that a machine can do. For example, like, does the app look like the design? It's a computer vision problem. We don't need a human to look and go through every single screen on every single device and highlight, what's wrong. And so those are really good examples. Our entire platform is powered by a knowledge graph. So think about a knowledge graph as like a synthetic brain. It knows what you want to build before you know, because it's got so much data and so many relationships between them. But the most important thing is, what we're really seeing as an industry trend is the shift towards making humans more creative. So you don't have to do the benign work.
Is it kind of like, I love editing, so like somebody writes something and then you go off and edit it. Is that kind of how we,
even
to some
further?
extent?
Yeah, look, so I think the editing is even, I think the editing is a great analogy, right? And I think that's what you're getting, what we're seeing now is 80% of the work can be done by machine.
Yeah.
The last 20% is the human power of creativity.
Right.
Is ChatGPT then, and I'm calling it that, but I know it's a lot bigger than that, is that a tailwind or a headwind for you?
I think it's a tailwind. I was joking with someone this morning that suddenly LLMs are things that you hear on the tube.
What are
in
LLMs?
The large language models,
Oh,
which
okay.
the acronym that, obviously what ChatGPT is underlying is. 6 months ago, no one talked about LLMs in the tube or ChatGPT in the tube. Now suddenly everybody talks about AI.
So this is something we were trying to talk with our Rachel Metz, who covers AI for Bloomberg News. I mean, what is it? What happened that all of a sudden this is dominating our conversation? AI is not a new thing. We've been using it already. We were talking about before you, or as you came in, that I write a sentence and whatever program in it helps me finish the sentence. What is it that happened? Was it just Microsoft buying something, or what was out there? What was technologically that happened?
So I think it was like the perfect storm.
What do you mean?
And it's like you had a piece of technology that had just reached the right level of inflection. It got in the hands of the general public. They could actually do things with it. You had enough people writing about it. And it drove into mainstream news so quickly. Keep in mind that the reason it's become so prolific is a part of also how news percolates today compared to, say, when AOL came out with the internet way back when, right? In the early internet days.
It's very easy to go quickly
It's
viral.
very easy to go very quickly. It's all bite size.
Your business, tell us about growth rates. We're Bloomberg, we like numbers. Tell us a little bit about what you guys are doing. Are you profitable? What's your growth rate?
So we grew last year at 230% year on year. The year before we grew at 280%.
200, are you talking top line? What are you talking
Top line revenue.
Okay.
And 200.
Can you tell us what kind of numbers?
It's in the high hundreds of millions. It's low in the hundreds of millions.
Okay.
And the year before we grew at 300% year on year. We've only been out of beta for 2.5 years.
Profitable?
We're almost there.
Okay. This year?
On and off. I mean, technology companies are also investing a lot, right? So, but for us, it's the more important thing is we're really focused around building a business with strong unit economics. And so, we return between 4 to 6 times marketing and sales. So our customers really stick onto the platform and they spend more.
All right. Really interesting, and it really just plays into so much that's going on in our world. Come back. Let us know how the growth is going.
Thank you.
Really appreciate it.
Love to come back.
Yeah, really fun. Really appreciate Sachin Dev Dugal, co-founder and chief wizard. What does a chief wizard do? Just, you got 10 seconds.
Learning to be a CEO.
Okay.
Oh, that's cool. Every CEO should adapt.
That's a nice cover.
Yeah.
He is chief wizard and more of Builder.ai in our Bloomberg Interactive Brokers studio. Looking forward to him coming back and giving us an update. All right, you're listening and watching Bloomberg Business Week right here on Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are keeping an eye on Tesla shares after hours. Tesla now down by about 3.8%. It reported first quarter earnings that just missed analyst estimates after a series of aggressive price cuts squeezed profit margins. Gabriella Coppola covers Tesla for Bloomberg, and she was a guest on Bloomberg Business Week.
About, Elon Musk from the beginning, even when he was talking about going through production hell, we didn't think he was going to make it. He has always stressed that he was going to drive down costs. And now we're going to see him leverage that. And it's just a matter of, if you've been doing this, for a decade versus, GM or Ford or Stellantis or Volkswagen or whoever, who are kind of just now coming into this, even though they're, legacy automakers with a lot of manufacturing experience, Tesla has more experience than they do at building EVs.
And again, Tesla stock after hours down by roughly 3.8%. IBM out with earnings, and it delivered a forecast for annual revenue that's in line with analyst projections. It did deliver a cautiously optimistic signal about technology spending in an uncertain economy. IBM shares after hours up by 3.1%. Meta Platforms cutting jobs across the company as it restructures teams and works toward founder Mark Zuckerberg's goal of greater efficiency this year. Also, the Disney company saying it will be cutting thousands of jobs next week, including about 15% of the staff at its entertainment division. This, according to people familiar with its plans. I'm Charlie Pellet. Those are the company stories we're watching this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
I'm Madison Mills here with Carol Masser. We are going to have more Business Week for you to come, but first up, let's get a check on the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Madison. The Supreme Court apparently needs more time to decide what to do concerning the abortion pill mifepristone. It has extended until Friday a stay on new restrictions that were imposed by a Texas judge who is concerned about the FDA approval process. The Biden administration and the drugs manufacturer say putting curbs on a pill that's been used for more than 20 years would create regulatory chaos. The Massachusetts Air National Guardsman charged with leaking top-secret documents made a brief appearance in a Boston federal courtroom today. We got details from Bloomberg's Kim Kerrigan.
21-year-old Jack Teixeira waived his right to a preliminary hearing during his brief appearance before a federal magistrate. A detention hearing was originally scheduled for this morning, but the defense asked for a 2-week postponement. Teixeira was based at the Otis Air National Guard Base on Cape Cod and supported cyber defense operations. Now his unit has been put on pause as the Air Force investigates how a lone airman could possibly access and distribute hundreds of highly classified documents. Kim Kerrigan, Bloomberg Radio.
2 teens are in custody and charged in connection with the mass shooting at a Sweet 16 party Saturday night in Dadeville, Alabama. 4 people were killed, more than 30 others injured. Mike Segrist is the district attorney for Alabama's 5th Judicial Circuit.
Even though these are 16 and 17-year-olds, we will be charging them as adults.
Segrist says they are going to make sure all the victims have justice, not just the deceased. More than a third of Americans live in places with unhealthy air pollution levels. That's according to the latest annual report by the American Lung Association. The report found 120 million people live in areas where the air was rated unhealthy in 2022. That's actually an improvement over last year. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
You're listening to Bloomberg Business Week. It's now time for Wall Street Daily. David Weston speaks to the top names in finance and economics, taking on the week's biggest issues on Wall Street.
And in business, in today's Wall Street Week Daily segment, Bloomberg's David Weston catching up earlier with someone very familiar to our Business Week audience, Jim Weber, the CEO of the Berkshire Hathaway-owned Brooks Running. Here's a little piece of their conversation.
You know, as we started this year, I described this year as probably the toughest year to see around the corner in retail and certainly in our category running than we've ever been at, just because of the economic issues and, you know, COVID disruptions that are still hanging on. But here's what we're seeing. We finished last year really strong. We were up 26% in Q4. And this year, running continues to be super strong at retail. We're up 19.5% in Q1. So the consumer is still there, I think, in our category. There's lots of hesitation and lots of fear, you know,